If you're looking for a safe and secure way to invest your money, government bonds might be the answer. They're also an excellent way to earn interest on your savings and avoid some of the volatility associated with stocks. However, there's a lot of information out there about government bonds that may leave you feeling overwhelmed. Fear not. With these tips for investing in government bonds, we'll help clarify what this type of investment really is and how it works so you can start building wealth with little risk involved. Tip 1. Before you invest any money, learn about the bond and the agency backing it. Who issued this bond? What type of security is it? Is it a fixed rate or variable rate bond? What is its interest rate? How often are payments made, monthly, quarterly, or annually? When will this investment mature? When can I cash in my investment? Tip 2. Find a broker to help you sort through all the different types of bonds. If you're new to investing in government bonds, it can be confusing to figure out how and where to start. A good broker can help you sort through all of the different types of bonds and find one that suits your needs. To find a reputable broker, look for someone who has been in business for several years, has an established reputation and good reviews from customers. You can check out some on Yelp or Google, and offers competitive rates on their services. You should also ask what kind of support they offer clients. Some brokers offer educational seminars about different types of investments, so that investors are better informed before making decisions about what types of investment strategy might work best for them. You'll also want to examine the company's financial statements, which show its assets and liabilities and whether it can afford to pay off its debts as they come due. You should also check out how much debt each issuer has taken on before buying in order to ensure there's enough cash flow available if things go wrong later down the road. Tip number 3. Buy bonds from companies and agencies that are financially stable. This means taking a look at the bond rating, which is similar to the credit score you might get when you apply for a loan or credit card. The higher the rating, the more likely it is that you'll be paid back in full on your investment. You'll also want to examine the company's financial statements, which show its assets and liabilities and whether it can afford to pay off its debts as they come due. You should also check out how much debt each issuer has taken on before buying in order to ensure there's enough cash flow available if things go wrong later down the road. Tip 4. Use tax-exempt bonds for municipal debt obligations. The best way to make sure you're investing in a bond that will be tax-free is by purchasing municipal debt obligations. These bonds are issued by states, cities, and counties as well as other government agencies. They can be used to fund public projects like schools, roads, and hospitals. The interest income generated from these investments is not subject to federal income tax at the investor's level, but may still be subject to state taxes depending on where they live. This means that if an investor doesn't live within the same jurisdiction issuing their bond purchase, then he or she might not get any benefit from using this type of investment vehicle. The rate of return, also known as yield, is determined by two main factors: current interest rates set by central banks such as the Reserve Bank of Australia, RBA. These are usually expressed in terms of an annualized percent, which shows how much each dollar invested will earn over time if left untouched until maturity. For example, if we were talking about 10-year bonds issued by Treasury Corp Australia, then our current RBA cash rate would be 2%. So this means that if we invested $100 now, then at maturity 10 years later it would be worth $120, $100 x 1 plus 2%. Tip 6. Understand any fees or penalties associated with different bonds before you invest. Bonds are like loans, and they come with their own set of rules. Fees and penalties can be charged when you sell the bond, if you don't pay interest on time, or if you want to cash out early. The best way to avoid these charges is by choosing a bond fund that automatically reinvests all interest payments back into new bonds. This way there's no need for extra work on your part. So there you have it. Investing in government bonds is a great way to get started in the world of investing. You don't need a lot of money, and you can easily buy government bonds online or through your broker. Once you own them, they will pay interest every 6 months until maturity, when they will pay back the full value of your investment plus any interest earned over time. Gather your resources, take a chance and watch it pay off. Wishing you luck and success as you invest in your dreams.